Ladies and gentlemen, welcome back to the channel. We're going to be going over all of the data you need to know on AMC stock for this upcoming week, as well as give you guys a little bit of a price prediction, at least what I am expecting with AMC stock for this week. Now, I highly recommend you guys watch the video that came out before this one earlier today to get a full context, scale, and scope of how important this week is going to be. You're going to have CPI, in which I share my estimates on where I think CPI is going to be, retail sales, other data points. We're also going to have earnings. We're going to have a lot of different things, a potential government shutdown, a Moody's essentially downgrade over the weekend, that are all going to be affecting the markets. We'll incorporate that a little bit here in this video, but we're not going to go into depth on each and every single one of those different things. So we have a lot to get into in a very short amount of time. Hit that like button and subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Let's first start off with a little bit of bad news for AMC. This is really for all theater operators in general, but AMC is the largest one, so we're probably going to get a reaction from this. The Marvels has the worst opening weekend ever for any MCU film at 47 million. The Marvels generated an estimated 47 million domestically over its debut weekend, the lowest in franchise history. Initial projections saw the latest Marvel Cinematic Universe film opening to between 75 million and 80 million domestically. The only MCU film that have opened lower than 60 million have been 2015's Ant-Man and 2008's Incredible Hulk. Disney and Marvel Studios have struggled to reconnect with audiences in the post-Endgame era. That was actually the last Marvel film that I seen in theaters was Marvel Endgame, and I think that was like 2019, I want to say. Great movie. Nonetheless, this is not going to be good news for AMC stock in the slightest bit for the at least start of this week. I think things will be overshadowed, or this will be overshadowed, by the CPI report, by the retail sales, by the move in bond yields. You're probably going to see some semblance of kind of what's the word I'm looking for? Symbolic relationship again with the markets and AMC stock. Now that we have earnings out the way, hopefully this dilution out the way, at least priced into AMC stock via the latest drop that we have seen in AMC. Now let's go ahead and run through the data, look at the option activity, where people are actually positioning in their portfolio. So taking a look at these short interest numbers, take it with a big grain of salt. I don't think these numbers are accurate whatsoever, but you have a short interest percentage of free flow at 9.65%, $166.25 million worth of short positions. Short interest days to cover 0.87, 19.09 million shares that are currently sold short. Days out on loan 17.38 million shares. Cost to borrow 1.29%, utilization of 35.8%, and a short score of about 57 out of 100. If you look at the cost to borrow fees, cost to borrow max about 14.39%, cost to borrow minimum 0.35%, and cost to borrow average about 1.43%. So the numbers not as impressive as, you know, what we're used to seeing for most of us, but these numbers are actually coming up quite a bit. The short interest was estimated at 6%. Now it's almost 10%. I think the short interest is way higher than that, at least 30% in my opinion, but obviously that's just my opinion and should not be taken as fact. Now, if you take a look at the interesting flow sentiment over the past week, it was actually slightly bullish. 58 orders totaling 4.89 million. And when I say slightly bullish, I mean a positive order value of 51%. So a little bullish. Now, if you take a look at next week, you do have open interest, 63.15% calls, and 36.85% of the open interest being put. So pretty dang bullish for next week. You have a put to call ratio of open interest at 0.58. That is better than the 1,000 day open interest, the next 1,000 days, of 0.67 for your put to call ratio. Now, put to call ratio volume at 0.85. And what you seen on Friday was 54% call volume and 45.83% put volume. So a little bit better than what some people might have feared, considering the last 2 days were very, very negative overall. Now, a quick look at the Stonko tracker data as well. I think this is pretty exciting for this next upcoming week. You do have calls in the money about 2,900, calls out the money 135,000, and puts in the money of 35,641, puts out the money of 35,000. There's a lot of puts in the money. If you do get a bounce in AMC stock, you're going to see those puts go out of the money. That's going to be good. That's going to give you some buying pressure. Now, at the same time, there's a lot of calls out the money. So if you do see the calls, start to actually go into the money, well, that's obviously going to be bullish as well. So I think things are so bearish right now that you almost have to think positively for this next upcoming week. At least that's the way that I am thinking about this. Now, the biggest thing, again, that's going to probably move AMC stock, that's going to move the markets, besides Monday, after we react to this film that just flopped in the theaters, which there's not that many films going to theaters, so we can't really afford them to flop. And I think that's the biggest reason why, if AMC stock is down on Monday, well, that is it. Now, the second most important thing is going to be what bond yields do. In regard to the Moody's downgrade, that's going to make the cost of capital more expensive for the U.S. government. That's not exactly going to be great. As well as that, you do have, let's go ahead and go to the main page on CNBC. You do have the new funding bill that was put out from House Republicans, and we could have a government shutdown as early as this week. So you're getting some kind of mixed reactions to this. Some people are saying this is okay, some people are not. It's basically like staggered funding. So some things will get funding at the same as they were. Some things will not be funded and need to be kind of looked at again. So this time around, if the government were to shut down, it would be like a data blackout, so we wouldn't get some of your major data reports, and that would obviously not be great for our markets. I'm sure that would be a negative thing. So that's something we want to be watching, but also bond yields and what the expectations are for Fed policy. Following that CPI report, following retail sales on Wednesday, the probability of rate hikes, rate cuts, keeping rates at where they are going to change. So for December 13th, there's a 90.9% chance of a continued pause and a 9.1% chance of a rate hike. For January 31st, 77.7% chance of a continued pause, a 21% chance of a rate hike. For March, 68.6% chance of a pause, 12.4% chance of a rate cut, and a 17.8% chance of a rate hike. For May, you have a 43.3% chance of a pause and a 40.4% chance of a rate cut. Well, this week, these are going to move around a lot. So you're either going to start pricing in a rate cut in May, or you're going to continue to price in a hold. I don't think a rate hike is going to be priced in unless you get a really strong economic data report with retail sales and a really hot inflation report. Then you might actually start to price in the probability of a rate hike coming sooner rather than later. Your first official rate cut as of right now is priced in for June 19th. So these probabilities are going to move around all over the place, and specifically due to retail sales, your expectation of GDP for Q4 is also going to move around quite a bit. So that's going to be important to keep in mind as well. Now, with that being said, a quick look back at AMC's option activity, and when we blow this up in the bubble chart, you can see a lot of activity around that $9 call, about 11,000 for open interest, 10,000 for volume on Friday. A lot of activity as well around the $8 put, volume of 7,000 on Friday, open interest of about 10,000. So the $8 put, the $9 call, going to be some exciting levels to be watching for. The $9 call at this point, pretty decently out the money for AMC, considering you've fallen like a rock recently. AMC stock is currently at $7.96 following that 8% decline on Friday. And what was on Thursday a decline of about 13.68%. Day before that, you were down 1%. Day before that, you were down 6.67%. So I do think you are due for a bounce here. The RSI at 36.09. That's probably what we're set up to get. Now, if you do get a bounce, that could lead you back to about $10 per share. That would be a pretty good week, to say the least. If you are buying at these levels, that would be a gain of about 24 to 25%. Now, if you fall from here, I do think that lows around $7.05. Could you go lower? Absolutely. But that would still be a drop of about 12% from here to get back to your low that you've seen on September 11th. And just personally, I think given AMC is now making money 2 quarters in a row, they've added money to their bank account. Yeah, AMC is diluting shareholders, but if you look at the market cap of AMC around $1.5 billion, well, AMC is roughly going to have about 1.3 billion or so, over a little bit over $1 billion, maybe not 1.3 billion, maybe like 1.1 billion of cash in the bank. You almost have the same amount of cash in the bank as your company is worth, let alone your assets, let alone future just cash flow that AMC will bring in. And the fact that you're not actively losing money anymore at this stage, I think that makes the valuation proposition even more attractive for AMC. So I think for those reasons, you're probably not going lower than $7 per share. Would it surprise me? Would I be absolutely shocked if we fell under 7? Well, no. I don't think that's going to happen this week, though. If the markets did fall, if we went into a crash event, your low that I think you could hit is about $5.50 per share. That would be a big level, I think, of demand, even for some of the most bearish people out there. And again, your RSI at 36.09 does also support at least a short-term bounce for AMC stock, guys. So that is going to go ahead and do it for this video. Again, that upside move, I think, could be around $10 per share. That downside move could be to about $7 per share. Notice the risk to reward, in my opinion, this week is about a $2 move to the upside and about a $1 move, less than $1 move to the downside. So risk reward looks about double as high to be long in AMC right now than to be short in AMC. So hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Let me know what you guys think about all of this information. Most importantly, enjoy the rest of your day, and I will see you in the next one.